Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Weekend Show. Are we allowed to say that? No, it's the Broiler Chicken Show. I have to go bark, 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 bark. So that's actually when I'll know that YouTube is live is when I hear the bark, bark, bark. I go bark, 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 and there it is. Yay! We're live. We're live. It sure is an interesting world that we're living in here with this social distancing and getting online and learning. Wow, what an incredible world that we're in here right at the moment. For people who do watch this offering regularly, half the time I just sort of sit here and go, okay, now how can I possibly provide these good people, some value here today? So, if anything, I wouldn't even mind we be a little bit more sort of interactive with the audience, and by all means, if you'd like to ask questions, and really, I'll just give you my sort of 2 cents. I think current bid's about 0.0001 on the pink sheets. That was an old funny expression that we used to say eons ago when people used to trade pink sheets. Do people still trade pink sheet stocks anymore? I suppose a big chunk of that audience has been sent off towards crypto. I believe they are green now. Could be. I don't know if that actually be interesting. I wonder what the junior market in the UK is called, Josh. I'm sure there is a name for it. And now insert smart ass answer here. Anyway, so welcome back to the frivolity. Actually, I was really oh geez, where do we start off? Okay, so. The main purpose of these weekend shows is to, number one, try and help anybody who happens to be in the current level 1 program. And if they have specific questions, I do remember somebody was asking in the level 1 and even level 2ers and level 3ers, hell, if you want. I mean, the level 3 stuff's a little bit advanced, so I don't want to go into too much detail about options trading and stuff in these free videos. But especially like level 1 people, we just wound up the current semester. Super pleased. Positive feedback from all participants. I think everybody got really good value for their money spent. We sort of indoctrinated a new level 2 instructor, Kiran, and I've been going on about him. I think he's a fantastic addition to our what do you call the teacher and TA body? There's a name for it. Anyway, our staff. So congratulations, Kiran. I think he's trial by fire. Joshua and I both helped him immensely through this current level 2 program. And I think faculty, there you are. Thank you, Jonas. Jeez. IKEA, that's comfortable faculty. And of course, happy Easter, everybody. It's Easter Sunday. So happy Easter. I had sort of mused last week about how I was very curious to see how organized religion was going to handle this pandemic and sort of stay-at-home orders. And God bless, best wishes, best thoughts, PMA, all that kind of stuff coming out, radiating from Brian. If it makes any at all difference in this world, I know some people are going through some just absolutely catastrophe sort of situations. My best wishes and my love and my hugs and kisses and everything goes out to you. So please, all the best. It sure is a different world of social distancing and social disinteraction. I do find it fascinating, though, that what I am hearing, though, is people are still using their social networking tools online and stuff even more. And the internet's not going down, right? The internet's pretty solid. So, Hopefully you have ways to communicate and keep in contact with people. Best wishes, everybody, for everybody. Oh boy, what a tough time we're living in. As you can see from the image on the screen right here, we've got the dashboard up and running, and really filling out nicely as a usable tool I can seriously consider on a daily basis getting market information. So hats off to Sjord. We've definitely been working our ass off through this quote-unquote developer cycle. Really putting a lot of time and effort getting the tools for site members to the point where TRI is, what do they say, unbreakable, or I think Sjord's got a great term for it. It's like anti-fragile. So congratulations, Sjord. Julian, of course, just rocking it. He's turned into just such a fantastic day trader. More, actually, not necessarily day trader. I would consider him more of like a swing trader. And having a lot of fun in this market. And the great part about it is the market is so insanely volatile right now that, you know, if you can build your plan, if you can be patient and can be disciplined, and really buy when others are crying and sell when others are yelling, which of course is far easier to do said than done. But if you can build yourself out to be able to do that, man, this is a trader's paradise. So guys like Julian are just having a field day in here with his trading his gold market and such. So congratulations to them. Happy Easter, Dina. Hello, Justo. Ahmed. Bruhoo007. I've had a hard time pronouncing your name before. Long Range Market Crypto says CNBC says the S&P is out of bear market. Oh, goodness. You know, the irony of it all, Mr. Long Range Crypto, is according to our January barometers and crazy things like chaos theory, I wouldn't be shocked to see the stock market at new highs here before the end of the summer. You know, I've often said, you know, okay, so I'll leave that thought. Getting back to what I originally started here, the purpose of this video here on the weekend is twofold. It's number one, to address student questions. So by all means, if there are anybody, because we came to the end of the semester a week or two ago, the various programs all wound up, and everybody's now in exam hell. So have fun, guys. But if you have questions, this is the opportunity to get Brian to walk you through step by step. Brian, I just don't understand what the hell you mean by intermarket analysis relationships. Or I just don't understand the yield curve. This is the time to have those questions asked. I have to say, what I'm so pleased with, and Joshua now seems to be such a great demonstrator of this as our sort of level 2 TA, is the concepts just keep getting rinse and repeat. We keep seeing great data and application of these tools. And Kiran even did this in class. You know, somebody said, "Can you just walk through drawing a trend line, sort of?" And he's like, "Here you go, Bitcoin chart, boom, boom, boom. There's a high to low trend line." And the irony of it all is it's just spot on. So these tools, everything is all intermixed and will all be happening in real time. And as I've said repeatedly, my job here is not to tell you, you must use that tool, you must use that tool, and you must use that tool, you must trade like a robot and take the signals exactly at this. No, that's not the purpose of this site. The purpose of the site is to set the table for you. And here are all of these wonderful tools. And then our school program is, okay, how the hell do I take all these damn tools and actually put all this together into a cohesive small business? I'm running my small business of trading, and that's all talking about your plan. What does your plan look like? So consider even these weekend shows sort of more of that sort of setting the table for you. Have you thought about using this tool before? What happens when we use that tool? So like I said, if you have questions about any of the concepts in the classes, you know, Sunday shows, this is where to do it. if the class material itself is insufficient. And then the second thing I like to do with these shows, and this is sort of where you guys on YouTube, people that sort of regularly watch, if you want to ask questions, we can do a little bit of interaction. We got quite a few people in the Hangout here today, so by all means, right on, Jeff. If you guys in the lounge have questions, the problem is I have to click on a button to actually load up these. Oh, hi, Nick. Nick here says he just signed up for the level 1 program and he's excited to start. How ironic. Julian set the start date of level 1 program on my birthday. Thanks, Julian. I guess I don't get the day off that day. Hey, cool. CMW says, hey, just catching up. The small UK penny stock market is the alternative investment market. I have thought about whether it has good buys since crypto took the spotlight. Yeah, well, the cool part about it, CMW, and actually this is such a great tie-in because, everything that we teach at TRI, nothing has ever been... what's the word I'm looking for? It's not like we're reinventing the wheel here. Ironically enough, CMW, just like in crypto, how it's very difficult, and there are ways to figure out, especially if it's like POW, there are ways to figure out what value is. Believe it or not, there are ways to figure out what value is in the penny stock market, venture cap market. It's a little bit harder when the companies actually tell you right on their marketing material they don't have the legal obligation to tell you the truth. That does make it a bit challenging. Thankfully in Canada, we're so bureaucratically top heavy. These penny stock promoters, even they have to basically sign off in blood when they produce anything. Because we went through a really bad scandal about 20 years ago where they're like, enough is enough. If you're going to say something to the public, you better sign it in blood. Anyway, the point that I wanted to make was, what do you do in sort of your social distancing environment? And I was actually really, this is another great sort of feature of TRI, is one TRI site member, OG, he happens to be a partner here in Vancouver, in a little fun little club we have here locally. He sent me this video here yesterday. And I thought this was, in fact, I might even argue that and it's dangerous because I could get myself into a lot of trouble with the 1%. But I actually might argue that every single person that watches this video today, this Broiler Chickens show, you should watch that video. You don't really have any choice. I would be disappointed if you said, Brian, I'm not going to even look at this. I mean, it's about 3.5 hours long. So don't get me wrong. This guy, I might even argue the body of work that this gentleman did. And I'm just going to type in here, please, everyone, do yourself a favor. In fact, I even tweeted this out, right? I said, do yourself a favor and learn from this video before it vanishes. I was so impressed with this gentleman's documentary, this body of work that he did. Like, it's about 3.5 hours long, and of course I'll get into trouble if I play it and stuff while I was doing all that kind of crap with YouTube. So do yourself a favor and go watch this. That's what I did with my social distancing Saturday night. Such an interesting conversation, I have to say, and in a weird sort of way, ironically enough, for all you crypto enthusiasts, I might actually argue, all right, where did I put that? and it was shared to me by another site member, but I don't want to get him in trouble with higher up, so he will remain anonymous. I think I did post it yesterday in the lounge there, Colleen. So you could always scroll up through the lounge and find that. Yeah. So I thought, as a tie into crypto and a tie into Bitcoin and a tie into what we're really interested in here. I thought it was fascinating that the Rothschilds actually did make it publicly known that they did take a fairly sizable position in that GBTC back here. This happens to be the stamp chart, but gee whiz. That looks like an awfully interestingly timed purchase. But the way that I sort of interpret this is, do you think the Rothschilds are ever going to, well, I'm sure they do, but do you think they're really going to be interested in seeing their investment go underwater? Probably not. And interestingly enough, the whole process of washing the public out, and sadly, people are going to buy like $5,000-$6,000 and go, oh shit, if it loses 50% of that value, I'm going to walk away. And ironically enough, all that's going to do is just dump Bitcoin price right back into their original buying level. And I get the sneaky suspicion, especially like this kind of consolidation at 6, bang, 50% loss. It looks almost poetic the way that they did this. Long consolidation, build up psychological support, knock it in half. And like I said before, ironically enough, they don't really feel any pain through this. I'm sure they were letting go a bunch up top. But, if anything, the fact, what does good old Brian call all of these lows? That low there, that low there, that low there, that low there. This will be a quiz for your YouTube audience. Anybody on YouTube? Yeah. Oh well, that's okay. So, and actually, this is kind of cool. So we got the good answer. So we got and you can see on the screen them coming up here. So we've got the dumbed down YouTube audience. Got to keep this as simple as possible. Na levels, which is good. And it looks like you guys got it. And then Joshua in the lounge, you saw the screen there. He goes, "Oh, that's the IFP. That's the institutional fingerprint," which is the textbooky, very course material. Okay, what's really going on here? So I actually like that. That was good that we got both answers there. So the simple answer is na, right? The complex answer is, ironically enough, to actually get the public to sell, you actually have to engineer down markets. That's how do you get the public to panic and sell? And if you want to buy in size, right? That's the whole premise of these down markets. Somebody stepped in and said, no more down, you go up. No more down, I said, no more down, you go up. And I think that's probably a very, very good anecdote. Market came down, and the Rothschild said, excuse me, you know who runs the show here, right? And boom, up she goes. And I might argue that this whole process is just simply getting the public to liquidate, panic, and of course get totally screwed over. Oh, this is the bottom, bang, 50%. Oh my God, oh, my retirement's screwed, it's over. Right? But really, all they're doing is they're just bringing them right back down to the old na levels. I might argue this is a very good anecdote of institutional fingerprint. What does that fingerprint look like? Really good anecdote there. Unfortunately, you're all looking at this and going, but wait, slow down. So that level's down there at about $2,000, and here we are up at 6,800. Wait, what? Slow down, what? Yeah. That's sort of how I'm seeing things right now. This actually looks I hate to say it, folks, but this actually looks extremely dangerous. We talk about V tops and V bottoms. Well, of course, Minna. You know what? This actually, before I leave that Rothschild thought, there's one other thing I wanted to mention here. This and how one of the sons was sent to London, and he had this is a really, really cool. This is how deep this guy goes. This really should be required reading. I disagree, Andy. I actually disagree. Because Andy says here's Rothschild owns every central bank. I think they could care less. I actually disagree in that. I know I got like about 10 different thoughts here going. So, Andy, oh geez, how do we deal with this? I think we can make the argument that the fiat system is broken. I think you can make the argument that the world in itself is losing confidence with this system. The irony of it all is, I think, for the bankers and for the classic banking world now, Fed's taking rates to zero, so they can refinance all the short-term paper they want. It's not going to cost them a dime. That whole model, we borrow at the short end, we lend out at the long end. Even 30-year mortgage rates, they haven't fallen anywhere near zero. So there's still a profitable spread. And that's the whole danger of the yield curve inversion, Andy. Do you understand that? That is the absolute worst thing that could possibly happen to bankers. Because then they're borrowing at the short end at high rates, lending out on the long end at lower rates, they're losing money. Whoop, something's wrong with that model. So the irony for the fiat system in that interest rate model is that it's just a question of where the decimal place is. I found it interesting that when I was a kid, I bought a bag of chips for 25 cents and a pop for 25 cents and a bag of chips for 35 cents. Now you go to the grocery store and quite literally those prices, all they've done is they've just moved the decimal place one place over. Now it's like, I'm absolutely shocked. You go into a gas station, you buy a pop, and it's like $2. It's like, what the fuck? So, and what's even worse, and most people don't even realize this, is the actual size of the pop has also shrunk over time. So not only are we getting screwed on price increases, but the size of the products that we're actually buying, the actual amount of product you're buying, is actually going down. So you're getting squeezed from both directions. What a wonderful world we live in. Anyway, point of the matter here is I think a lot of people have lost faith in the fiat currency system. The U.S. debt growth scale is basically going parabolic. And at some point, this thing is going to blow up. At some point, somebody's going to wake up and say, hey, you know what? The emperor doesn't have any clothes on. How can they be running these $1 trillion deficits? And they're going to be like, now, then the deficit is going to go to $10 trillion. Then it's going to go to $100 trillion. Where does this end? At some point, it will end. It's just where. Interestingly enough, it might just be that the bankers and stuff are actually engineering one of these massive contractions, like the Great Depression, all that kind of stuff, to sort of shift the balance of power. And then what I found really interesting about this documentary, and I wanted to show you, was how the Rothschilds, through the Napoleonic Wars, played the market incredibly well. Right, the guy in London, which I thought was fascinating, they had set up a guy literally on the battlefield, a Battle of Waterloo or whatever, and he was supposed to stand there, and he was supposed to see who won the battle. And then literally, the moment the battle was over and Napoleon was defeated, he hopped on his horse and he just booted it for the English Channel. And he actually got back to Rothschild a day ahead of when the official couriers were supposed to arrive. and tell the official news to the Rothschilds. So a full day he had of warning. And so what did he do? And this is it's so important to you if you really want to be a trader. If you really want to, and keep in mind, nobody said being a trader and making money from trading, nobody said this was polite. Nobody said this was easy. Remember, we're dealing with humans, and this is the most cutthroat, what the last bastion of unadulterated capitalism out there, right? Isn't that Gordon Gekko's famous saying about the stock market? So you have to understand the kind of environment that you're playing in, and basically, with that forward information, knowing that the British had won, and knowing that the obviously British assets were going to go up in value dramatically. Winners of wars, the assets of those companies always go up, and the losers always go down. True, as Andy says here, they were actually playing both sides. And the typical banker, you might as well hedge your bets, right? If we loan both sides, then, as this documentary points out, usually the winners of wars make good on their deals, and the rewards are so big, it's almost like putting on like an option straddle. Right, Colleen? You know what a straddle is, right? So heads I win, tails you lose. Anyway. But the point here is that he went to his post on the London Stock Exchange and he started selling. Now, let's see if anybody on YouTube, let's see if you guys remember this. What's the rule in the stock market? If you want to buy in size, what do you do? If you are an institutional player and you want to buy in size, what do you do? And if you watch this documentary, then you already know the answer. Right? Josh is basically on it, but Josh is fucking old school, so he's so smart. But if you want to buy in size, what do? You start selling. That's the irony of it. On the YouTube video. Isn't that weird the chats come up here so you guys get the answer on the YouTube? And that's exactly what the son of a bitch did. Is he went to his post. He already knew that the British had won, but he totally faked the public out. And he was all downtrodden, and he said, "Oh, I don't know. Okay, start selling. And the irony of it all is he wanted to buy in size, I want to take over this country, and, in those days, maybe tens of billions, whatever. So he started selling, 10,000 to go, 10,000 to go. Hit the bid, 10,000, 10,000, 10,000, 10,000. It takes a lot of 10,000 share sell orders to get up to even like 1 million shares, let alone 1 billion. But he starts engineering a psychological panic, and the irony of it all is that the floor fell out of the market because everybody thought, we had forward news, the French won, Napoleon's going to go traipsing across Europe again, blah, blah, blah. And of course, that was exactly wrong. And on the other side of the market, he had all his agents secretly scooping up all the deeply discounted British bonds. And you could argue at that point, basically, the Rothschilds took over the British government. Wonderful. So it's a great analogy of raw, unadulterated capitalism. And also, too, I think this is a really good documentary just to simply open your eyes. I mean, obviously anybody who's watching this YouTube video other than the CIA guys and probably some CSIS. There's a couple CSIS guys I know that keep their eyes on me. I see you guys. Now don't shoot me, all right? I see you sitting over there with your rifle. Don't shoot. Don't pull the trigger. Anyway, the crazy bride again. But if anybody's watching this video, we're way too small to even consider doing anything about any of this. And if anything, I hate to say it, I also watched a lot of documentaries and videos and stuff yesterday over the weekend on Jesus, and learning a little bit more about his life and the trials that he went through, obviously. But in a weird sort of way, it's very much like us sort of tilting at the Rothschilds right now is kind of I don't really like to. I got myself into big trouble even talking religion recently, so I don't like that, and Brian shouldn't. But the point here is, in the Roman history books, there wasn't even a reference to Jesus' death, because it was so incredibly insignificant in their eyes. And in a weird sort of way, I think us barking at the Rothschilds and how unfair the world is it's sort of that same sort of thing. But here's how we can take a positive out of this, right? Just because they're doing what they're doing, can't we ride their coattails? Can't we at least acknowledge, like I said, going back to that original image that I showed you, can't we at least sort of, acknowledge the fact that, well, this sure looks, we know that they're long here, and it sure looks like this is typical, ramp the public up, get them all really long, then spend the next year or two breaking their hearts, and literally all they've done is they've just brought the market right back to exactly where they're long. I thought it was just it was poignant that somebody had shared this with me, which was basically just a history of the bankers and their games that they play, and really, really good documentary about how privately held central banks are really not in any country's best interests. But at the same time, too, the people that are in the money lending game know that it's a no-win situation. Because if times are relatively good, then people feel optimistic, and they're encouraged to borrow money and expand their business. It's just very simple, straightforward. Then, unfortunately, the economy gets a bit ahead of steam behind it, and it's inertia, and not understanding that these things move in cycles, and that inertia will, at some point, it will imbalance things. It will tip the scale too far one direction or the other. Overbought, oversold, those kind of concepts. And the cycle will have to correct itself. And it's in those corrections that the Rothschilds really do well. Just simply taking advantage. Like they used the 1920s. In essence, a lot of the roaring 20s speculative bubble was, basically people were encouraged to borrow money. In that case, it was buying stock on margin. And the regional banks were put in a position... I remember this through the early 2000s. There was these commercials on every single bloody day. Lost another loan to Ditech. Well, why are these people borrowing money? Why are you going out and borrowing money? I don't get it. People do. They want their Escalades. Back then, all the rage was to have an Escalade. And then, of course, the cycle breaks. Some might argue, and this is the tragedy of the central bank thesis, that at some point some higher ups deem that the cycle needs to correct, and then the central banks pull liquidity out of the market and engineer a recession. I've talked, and I, of course, teach in the education program at length about the business cycle and how sort of 20th century economic thinking um, helps the banksters. It works in their favor. The irony of it all is that they win both one way or the other. Um, in a highly capitalist, highly over-leveraged society, they do really well through the booms and the busts. Through a socialist, aka, other terms, central planning society, central bankers do really well too. They have a guaranteed business model. Well, and so that's the debate, Shane. I don't believe that it's as cut and dry as this gentleman. Shane says here, so which came first, the business cycle or the central bankers' manipulation of that cycle to benefit their own interests? I think they realize that the business cycle works the way that it does. And, Shane, this is just coming down to simple human psychology. Why are these idiots keep overdeveloping Vancouver real estate market? You know this. We've walked around pissed drunk through these developments going, who the fuck is going to buy this stuff? Now, did the banks go to these developers and say, please, please borrow money, please borrow money? No, it's the other way around. The developers thinking greed, thinking, hey, if I buy this asset at this price and then develop it and sell it at 10x, 100x, I can buy my Lambo. I can buy my wife the Gucci bag. She gives me great blowjobs. Hey, everybody wins, right? Isn't that how the capitalist game works? Right? Right? Shane got a chuckle out of that. I don't know if any of you guys will. So, I don't know. Is this chicken or an egg? Really what this comes down to is human greed, fear and greed. And the Rothschilds and the bankers fully understood this fear and greed idea. Now, one thing that actually really interested me about this education that I did, and I guess today's video is turning into let's talk about the banking industry. One thing I really did learn that I thought was really cool about this is that just because you put yourself on a gold standard, that doesn't necessarily mean that the central bankers don't win there too. The real problem is this idea of fractional reserve lending. And the ability to expand and contract the money supply at the banker's leisure. That's really what this all comes down to. Does that make sense, Shane? If you have a finite money supply, then technically only the issuers of the money supply can control that sort of actual the amount of this is a tough concept. Sorry, I got to articulate this so you don't get confused. If you have a finite amount of money supply in an economy, the economy will basically operate with that within that framework. And they did, this documentary, he did a great job talking about how money supply issues through the Roman Empire dictated its fate. Huge money supply at its peak, and then basically the money supply dwindled over the years. And, simply they lost, they paid for wars and stuff like that. Yeah, and actually, Andy, that was really good too. And it actually makes a lot of sense now, where J.P. Morgan was actually nothing more than just a puppet for the Rothschilds. That historically, looking back now, I actually really like that thinking. It makes a lot of sense, because the irony of it all is that even Vanderbilt himself, who was sort of beyond all of these people, he even commented after J.P. Morgan's death, when they sort of divvied up his will, he was kind of like, gee whiz, I thought he was a lot more wealthy than that. But it turns out that J.P. Morgan was nothing more than just a front man. So, well, what a surprise. Interesting too. Like when they sold shares of the central bank in the United States in 1914, um, 30, I think they said 33% of the shares were bought outright by foreigners, which were clearly the Rothschilds. So right off the bat, they own 33%. But this is the kick in the pants, which really kills you about these guys. Is actually I should move that off the screen. I didn't realize that was on the YouTube screen. Isn't that weird? I wonder why that's acting like that today. Usually that does. Yeah, but what I found really fascinating was that the way they set up these central banks is the government itself agrees to put up an equity stake, and then the bankers, and this is the really cheeky son of a bitch part of this, is the bankers set up a loan based off that 20% principal to themselves, and with that loan, they use that money to buy their equity stake in the central bank. So they never actually even spend a penny out of their pockets. That's the worst part about all that. Let's go back to tally sticks, damn it. Anyway, yeah, it's evilly genius, eh? And yeah, there's an interesting thing. We'll see whether this video even makes it through the end of today. So all you guys actually watching this video today, remember this, right? And for God's sakes, bookmark this goddamn video here, right? And do yourself a favor and just watch it, right? So that at least you know the truth. Because my hunch is all this stuff, it's I wouldn't even be surprised if this video here today mysteriously disappears, which is really sad. Anyway, the point that I wanted to get back to originally was the Rothschilds. They've got both sides of the game played, and once they're actually in control of a society, then of course they just grind it into the ground and deflate the shit out of the currency until it's worthless. I don't know whether we're actually at that stage. Really, the uncle point usually is that there is some sort of realistic alternative that people move on to. And one might argue that the collapse of the European economies and stuff led the way for the United States of America to become the next reserve currency. So what happens after that? It'd be really interesting to see if the Rothschilds have actually worked their way into the Chinese system or not, or whether that's just too beyond them. I don't know. That's that, and one might argue we might. And this brings me to my next point: is that what do you do once you get to the point you've diluted the shit out of the currency and you can't milk the system anymore? There's got to be something you do. What do you do next? And this is where the sort of whole idea of how do the bankers continue to work the system, they generate war. So, and again, what I'm hearing through this and sort of the history of money is that if we stupid humans would stop being so damn egotistical and waging wars on our neighbors, we wouldn't get into this problem to begin with. What I'm hearing is that these countries try to set themselves up. They, if they some of them, like Tsarist Russia tried to, Abe Lincoln tried to. Really good story about the greenback. I thought that was really cool. I never really understood the history of that term, the greenback, but now I do. And frankly speaking, I would love to be able to buy greenbacks and just, remove the banksters from the equation. I doubt we live in a world that's even remotely possible. And the irony of it all is the banking system right now, what are they absolutely dependent on? They're dependent on, of course, more people taking out loans. Isn't this interesting what's happened here recently, guys? Has anybody sort of picked up on this? We were at a position where basically borrowing as sort of a function of the interest rate curve, right? Yield curve. We talked a year or so ago about how people just aren't borrowing money. In fact, people are actually buying bonds, not selling bonds. Um, so what do the banksters do? I know. Let's figure out a way that we can actually bring the economy to a grinding halt. All of these people, of course, have mortgages. They're heavily in debt. They're cash rich. But how are we going to get them to be cash poor so they can go and borrow a whole bunch more money? And, of course, we keep playing the game. Aha! How about a global illness? What a convenient coincidence. Who knows, and that's getting into tinfoil hats and stuff like that. I mean, frankly speaking, I sure hope it, for humanity's sake, it's not the case, but who knows. But I did find it really interesting that all of a sudden, boom, out of nowhere, here comes tons and tons of, you can borrow money to keep your business going, right? You can, just staggering, like what, $2 trillion in stimulus? Now, that's all going straight into more loans and more bank interest vehicles. It's quite remarkable how the system works. So, of course, they're going to call it crisis, stuff like that. I mean, it was incredibly how quickly they rammed that down our throats. But anyway, it is what it is. Now, it's somebody there on YouTube had just sort of mentioned that I wonder whether could Bitcoin be a sort of modern day tally stick? I think the guy in the video here, he showed us a tally stick that was used to buy, I think he said, a share of the central bank. I don't know whether it was that or not, but he did show a tally stick that represented something like 20,000 British pounds back like in 1650 or something. Isn't that not the same thing as sort of Bitcoin, having a ledger where you can see exactly where your purchase was and it's indelible? I wonder whether the creation of Bitcoin is, in essence, our society's way to try and deal with this fiat system. And, the US dollar is broken. It almost like the tally stick system worked for a very, very long time until the central bankers had enough of it and they needed to put it out of business. And I think you could argue that a lot of the reason why it was broken apart was, of course, war, right? So, the banksters understand that you just keep milking the system until it breaks, and then out of the breakage comes civil unrest and war. And, of course, in war, people will basically, they'll sacrifice their body parts to win the war. So going heavily into debt to win the war, it's no big deal. And of course, if you do win, you'll honor your debts because you're the king now. So I think that the point of all this is I thought this was an absolutely fascinating documentary. It's a really good history lesson going way, way back. And, if you are stuck home, social distancing, and you're thinking about watching some sort of fluffy movie on Netflix versus investing 3-4 hours of your time watching this, I would recommend that you watch this. But of course, you're going to put a lot of people to sleep. Keep in mind, after about 20 minutes, I have to take a break. It was a job getting through it, but man, it was a great education. So, wow, I apologize, not talking about charts. I know there's some people that are like, Jesus, quit with the rhetoric and get on with the charts. Gave a sort of open invitation for people to ask questions. So I'll just sort of scroll through here. I don't know. Did you guys ever have any specific questions? I saw you guys just now pivot to Bitcoin as the new tally stick. Yeah. I mean, it almost feels like it, right? And then, like I said, gee whiz, we do all know exactly where they're long. And the irony of it all is dips into this area, which I've said repeatedly over enough, lots of times recently. I think this is a gift. If we get it, it's a gift. And I find it very hard to believe that it's ever going to go below these levels in our lifetime. I'd be really, really surprised. But against these levels, and especially knowing not only is these institutional fingerprints, all these key lows, but we actually know who the institution is. And it's the banksters themselves. Now, the good part about this, and I'm not quite sure if I have this exactly correct, because I'm not exactly sure the size of the A to B, but the good part about this is, believe it or not, and this is where I really believe, everyone, this is, timing the market through a crisis is not easy. This is tough trading if you're thinking about trying to pick bottoms and tops here. And of course, there are setups that come in off lower time frames. You can build yourself out to take advantage of these, but this is pretty difficult stuff for new people. New people to investing, really the simple message, where the hell's the damn chart I wanted to show you? The simple message I have for the public is just put yourself on a dollar cost averaging plan. And maybe like $25-50 a week or a month, whatever you can afford. You just go in. Don't try and outsmart the smarties, right? These guys. Don't try and outsmart these guys. But the bottom line here is, if you can just slowly nibble away here. In this particular case, what I wanted to show you was this is an interesting harmonic, and the reason why, I really like the idea of this being a didn't mean to do that. This being a classic bat. Oh, come on, you. Which is basically 78.6 or even 88.6. Let's put that back there. So I was thinking originally things like butterflies and bats. I was really thinking bat here. 88.6 correction to 88.6. And I put out some sort of, some tweets and stuff to that effect. Now I have to find the damn chart again. There we are. But what I really would like to see here, for me to believe that this is the bottom, is some sort of signs of divergence here. You can see this last low, divergence. This low here, divergence. This one didn't really make a divergence, but I think this was still sort of, are we in this trading range here? So I don't know whether I'd really call that a tradable bottom. I wouldn't even really call this. I think on Friday I sort of walked through. We want to see structure on the other side of confirmed divergence. Never came in. This I thought was a beautiful signal. And then sadly, of course, you can see the div that came in up top here, and poof, back down we go. So the point here is that what I really want to see is some sort of div here. And if that's the case, then this kind of thinking actually makes more sense. Because a pattern that I see happen a lot, which is just an absolute classic FU pattern, should look something like this shark here. I've seen these sharks a lot, and they're irritating because really it's a very chaotic pattern, right? You're thinking bearish, lower highs and lower lows. It goes out, takes out X, and then it violently rips back up to actually take out the original starting point, way back here. And I got a sneaky suspicion that's sort of what's in the cards here. Who knows? I'm just talking out my butt. But, and of course, what are we supposed to call these video offerings on YouTube? Please understand this. I like to just confirm with all of you that I'm not either telling you what to buy or what to sell, or really making any predictions of the future. This is supposed to be... Can anybody help them? What is the term? I just want to make sure everybody understands this right from the get-go. So if anybody bitches at me later on, I can direct them to exactly this point. Can anybody on YouTube affirm? Thank you, Brewhoo007. Thank you, everybody in the lounge. Appreciate it. Okay, so talking on my butt, I do like this kind of sharky kind of thinking. I wonder whether those Rothschilds have set this bottom up as a big liquidity pool, you can imagine there's going to be a ton of people that when they see if these lows are broken, they're going to be just absolutely heartbroken. Might even have a bunch of stop loss orders, people that just never got out of this and said, like some trading plans, I say, sell half of the position on your profit objective, move your stop to scratch on the remaining, and I wouldn't even be surprised if probably all those scratchers got busted out and then new positions came in here. But I could very easily see this as a liquidity pool. And then, given what we're seeing going on in the world, does it really make sense to expect a heck of a lot of growth out of the world right now? I don't think so. Value investors, they actually did very well through the Great Depression. I don't know whether we want to open up the gold Pandora box, but, people who owned gold through the Great Depression did relatively well. It was confiscated from them later on, but nonetheless, they at least didn't get destroyed. I might argue that a asset that you can actually tangibly say, this has some intrinsic value based on the fact that, in this case, the network has to be validated or this thing is worthless. The validation occurs through this process called mining, which is in essence just a competitive search for a very specific hashtag with the transaction log attached. Whoever can submit that the fastest to Mr. Satoshi's liking, you get the reward. And I think that this industry is very robust. I think there are a lot of participants in here that have invested a lot of money, that if we do get to the point, and let's see, all those people on YouTube, what is the magic number that we have to think about if we're ever thinking about, this thing could get into trouble? What is it we start hearing about that could actually bring the whole Bitcoin dream to an end? Something has to happen. Where am I going with this? Shane probably knows exactly where I'm going with this. If you start seeing this happening, it basically means Bitcoin is worthless. Hello? Anyone? Thank you, Josh. Meow. Well, the correct answer I was looking for, thank you all you YouTubers, 51% attacks. And I would have also accepted meow. I do find it interesting that BSV and BCH now, I think, have officially forked. No. 62%. I sure hope we don't get 62% attack. That would be problematic, Richie. So my hunch is that we're gonna go through this halvening, which means, you know what I'm doing? I'm recording the wrong damn screen. I was wondering why all this crap was showing up on the screen. You know what what a knucklehead. Okay, hold on a second here. Let's see if I can fix this. So you guys over on YouTube, usually I screen capture a different screen. So let's see if I can do that on the fly, or is this thing going to blow up? Let's see what happens. Survey says we're supposed to be over there. That's where we're supposed to be. There we go. All right. I hope the video still worked. I was wondering what the hell I was doing wrong today. And as you can see, this is a highly professional operation, aka edutainment. Okay, so the point of the matter here is I'm not hearing any talk right now about 51% attacks. Also, too, we've got the big halvening event coming up ahead of us. I don't think we have to worry about that kind of conversation now. My hunch is that we're going to sort of roll our way higher here into about... My hunch is about 20 to 21 days or something along those lines before the halvening. That's usually the window at which we start seeing price weakness. So I'm not quite sure how close we are. I think we're getting closer and closer to that date window. Do I have that around here? I thought I had those levels on here, but I don't see them. Knucklehead. Anyway, there were charts that I was following that had those happening dates and stuff fast approaching. Yeah, I guess here we are. So let's go like this and like that, something like that. All right. So, usually about 20 to 25 days, somewhere in there. Yeah, I know. So we've got another week or so to go here. Ironically enough, we have one site gentleman actually who was on Friday. Friday we sort of give him free reign. If he, hey Tomcat, how are you feeling? Everybody, give some PMA out for Random there on YouTube. I think he's actually got the coronavirus twice or 3 times now. He's sort of in almost like ground zero of coronavirus hell there in Eastern Europe. So hang in there, bud. Anyway, on Fridays, we have one site OG, and I think the world of him. I think he's an absolutely fantastic human being. He's a kindergarten PE teacher. I mean, fucking how good. The guy's basically a living angel. I'm actually, I'm almost, I hope that some of his good aura just simply somehow brushes off on me. But anyway, he comes on the call on Friday. I think he's a very intelligent individual, and he's been sort of talking about how we affectionately call it his buddies. This liquidity pool just sitting right up top here. Believe it or not, Colin, I still think you're going to get that level traded to. I think we got probably about a week or so here of sort of friendly left, and right at the very end of these moves, usually the market goes a little bit nutso. I don't know whether I can show you, but actually I did up a really cool study for the public. I don't think it's on any of these. Where I tweeted this out earlier, and I was kind of like, whoops, not that one. Okay, now I lost my tweeted this out. Right, done. Okay, there we go. What does the spring of 2020 look like? Josh. Oh, you kill me, man. I wonder what the hell I sound like on. I bet you, because we call 4.669, that's one of our fun little chaos levels. We call it the neighbor of the beast. So I bet you if you put me on 4.669 speed, I wonder if there's like hidden messages in what I'm saying here. That would be hilarious. It wouldn't surprise me. Actually, I'm talking in tongues. New Year's Fed sucks. Central bankers rule the world. Mandelbrot talking, yeah. Anyway, okay, back to the story. So I did this study up yesterday, kind of fun, while I was working away on the site. And actually, we've got a webinar coming up that Julian and I are working on. Jesus, goddamn webinars, like 4 hours. Oh, yeah, 3 or 4 hours. So huge amount of work. Basically, that was my day yesterday. But for fun, and this is what I do for fun, I put together this study of seasonality. What should our spring of 2020 look like? And this is based at, what's cool now is we got enough data where, we got about, a good 9 years, right? 9 years of historical data. So my hunch is we're probably going to look something along one of these lines. I don't know whether it's going to be like a 13 and we face rip our way up into the halvening, and then after the because this is usually what happens on these halvenings is you get this big honking rally. The market tops out about a month or so ahead of the halvening event, comes slamming back down, and then we just sort of settle in right around the halvening, and then usually we roll over and trend lower for a while. I had actually put out when I re-looked at this morning. I actually thought that 2012 looks really, really similar here. So you see how back in 2012 we had a big run up, then we have this pretty precipitous drop, right? Bitcoin basically lost almost 50% of its value there. Here Bitcoin basically lost about 50% of its value, and then we sort of chopped our way higher. So just from images, and I had sort of put that out there, and I just asked people, and it was interesting to see some of their comments. It's kind of ironic, though, that of the comments, nobody actually gave the same response, which is interesting, right? So some people are like 2014, some people are like 2016, 2016, 17, 2013, 2016. So I thought that was kind of interesting. There's no real sort of consensus here. I don't know what this year is going to look like, but I do like sort of thinking seasonally. Does the market have the wind at its back, or does it have the wind at its face? I think, like we said just a few minutes ago, for the next couple weeks, I think we're okay. Once we get beyond that sort of pre-halvening event window, all bets are off. And frankly speaking, I'm not quite sure what's going to happen here. But it was kind of I shouldn't have done that. It was kind of a fun study to, get the conversation going. Sort of think about, okay, what's the past 10 years look like? What does the spring look like? Right. 2020. You think this is going to go down as a year that was slightly interesting? You know what I find fascinating is, and this is such a great anecdote of sort of Brian. Like, if you really want to learn, Brian. Anybody who's been around the site for the past few years knows that I've basically been suggesting and I teach this in my course material, that we have to go through very normal cycle patterns. We are at the end of a long demographic pattern. Okay, boomers, right? And it's interesting how, like in the sort of political system in the United States, how they just keep propping up these okay boomers that are looking more and more like living skeletons. Well, it's kind of weird. They've got to let go at some point, but not yet. We also have the economic cycle, and we had sort of talked about how this past economic cycle was the most muted of these recent cycles, but it was also the longest. We've also demonstrated, I think even through these free videos, that the efficacy of the stock market moving to new highs is actually a joke. It's not. And actually, if you look at the stock market's performance, what we've done here over the past 5-10 years, actually 20 years, is almost exactly identical to the price action of the Great Depression. Almost identical. You have actually lived, whether you know it or not, over the past 20 years, you have lived through our generation's Great Depression. The interesting thing now, though, is we are now going finally through the reset that I sort of teach on my course material. The economic cycle was a little bit longer than expected. And, unfortunately, the message of our course material is not so much use this material to time your purchases, because timing 35-year cycles, that's kind of ridiculous. Could the cycle pivot 2 or 3 years ahead or behind in a 35-year analysis? Sure. But the point here is that the cycle was very overdue. And these people, I've been following these people forever. And actually, we had somebody on the site that was super jazzed with WD Gann. I mean, we have a lot of people on the site like Gann. But also really digging into astrological cycles, longer term sort of thinking, square of 9, that kind of stuff. And it turns out that there are people in the market that study this stuff in earnest. The organization's called the Foundation for the Study of Cycles, something along those lines. And this is basically their very typical cycle prediction of what the end of this particular economic expansion and then also demographic forces should look like. It's just how ironic that these guys were just a year or two early as well. And that was the comment that I made in the tweet was, this is so typical of me. I've seen this basically my entire 30-year career. I was squawking about shorting these goddamn Canadian bank stocks all last year. And the worst part about it is I didn't even get one goddamn trade on. I kept making excuses. Oh, it's frozen out. It's frozen out. Meh, 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 meh. I mean, the bottom line is, obviously that idea was correct. It's just what often happens with Brian is he's often right, but he's often early. So the sad part about this is it's not a question on the final exam. But it's probably worth, if you do follow along TRI and you follow along, I think we got like 12,000 followers on Twitter. I don't know how many followers we have on YouTube. Oh, wait a minute. We're supposed to do our thing, eh? If you've heard any value out of this, I'd appreciate you hitting the like button. Subscribe to our channel if you would like to be notified when the next one of these things pops up, and you're supposed to ring the Google bell and all that kind of stuff. But hey, Jamie, nice to see you, bud. Jamie there over on YouTube, same sort of thing. What do you think, Jamie? Could we see that there was trouble coming? Did you sort of get the feeling that we were at? Jamie does a report on TRI. He's another one of our OGs. He's over there on the YouTube page. And I used to always in classes go, to make sure that people wrote the information down, I'd always go, hint, 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 it's probably a question on the final exam. And then they get created like a meme out of that. But I think we can make the argument that the writing was on the walls. Well, it almost feels like the market, and the impression that I got was that the market almost felt like it was being finessed higher. And it was sort of being artificially propped up. Because I think a lot of people in the market that are long-term cycle people knew that this was the end. Remember, I've told you guys on YouTube, like John Bollinger last summer officially comes out and says, I'm no longer talking to the public. Go away. Now, when a guy who's been in the business 30, 40 years says, I am no longer talking to the public, clearly that's telling you that, hey, he sees trouble coming. So I think the smart money kind of knew that this was coming. Which really sucks. It's just that, classic Brian. I'm often right, but I'm often early. So, with regard to Bitcoin, I am extremely enthusiastic for Bitcoin, but I'm probably a bit early. I wouldn't be surprised if there's a bit more cleanup as we get through 2020 here. I do like the idea. If you can think out, that Benjamin Cohen, I think we say, he's sort of very respected in the crypto community, sort of mathematics behind all this, suggesting 2021, 2022, sort of our day to shine. I actually like that thinking, which means buying Bitcoin today in April 2000, we're probably still a bit early. But I love the idea of don't try and outguess these guys. They're too powerful. They will do things like they will paint W's and then go, fuck you. If you want to trade these, okay, fine. You got to live by the sword, die by the sword, and you better be damn sharp with your trading plan. You want to trade lower time frames off the setups? Great. But for most of the people watching these kind of free videos, the best thing I think you can do is just simply put yourself on a dollar cost averaging plan. Say, I love this story. I'm not going to try and outsmart the smarties. But when we get down to at or below reload zones, I have no choice but to start averaging my way into stories. So you can see where reload zones are on here. We're still in that zone. I mean, ideally, the best buys are at or below reload zone. But, I don't necessarily have any timing ideas in here. But, and actually it's interesting. Sjord on the site, He just has a simple rule. If Bitcoin is below, and I think, Stuart, if you're watching this, you want to make your mark like 7,500, the, dollar cost averaging plan goes into effect. I don't really have a problem with that whatsoever. Having said that, remember, dollar cost averaging people, you actually like to see price fall, because when price falls, it means that the dollar cost average size of the amount of this thing you get to buy goes up. So dollar cost averagers actually are rooting for one more push lower so I can get more, thinking a couple years down the road. Like sort of this 2020 sort of insanity. We've got, I also too, I'm a greatly appreciative. Another, absolutely like one thing I absolutely love about TRI community and what's ended up happening here. So I've really gotten to know some just really, really nice, beautiful people. One of the sort of side effects, student of the market, is, this person in particular happened to have very, celestial bent, we'll call it. And he's really opened my eyes into new celestial events and how they've played out through this year. I think it's really helped me, ironically enough, in a weird sort of way, it's actually helped me understand the context of what just happened here, especially like things in the stock market. If you don't have context to try and help explain why something like this just happens out of the blue, and then how it can just quickly turn around, makes it awfully difficult to try and make head or tail out of this. But I have to tell you, that celestial event, that played absolutely perfect through all this. And when I don't know whether you guys are noticing in the media now, I'm hearing number of new patients is falling in New York State. Number of new cases in Europe is falling. Number of beds opening up for new patients is increasing. Now remember, the number of deaths is obviously is a lagging, because those people that are sick right now, some of them aren't going to make it. So that the raw number of deaths, of course, is still, it's a lagging indicator, if you will. It would be like, and I don't want to make light of it, it would be like new cases is Jamie's leading economic indicators. Hospitalizations would be like coincidental indicators, like maybe like PPI or CPI or something. And number of deaths is actually the jobs numbers. And that's always a lagging indicator. And remember, the Fed always follows the jobs numbers. And as a result, things like central bankers and things like, bureaucracies and stuff, they're going to be following that last number, the number of deaths. And when that starts falling, then they'll sort of declare victory. But it's interesting how when we went through this pivot, how that was right through that crazy-ass fucking celestial event, man. Learn from this stuff. The irony of it all is we've got 2 more of these, and that's sort of why I put this sort of framework on my charts. So I actually think our pattern is going to look something along these lines. No idea if the levels are correct. But this is basically November is the big show. This is the one that I'm most worried about for the stock market and the broader economy. This is the end of June, beginning of July. And for what I'm worried about here, which really bothers me, and we can do the same thing in the stock market. The assets are incredibly correlated right now. You can see how I've mapped this out. There's the end of June. There is November. I'm actually a little bit bothered that, I was kind of thinking it might be actually good if we came down in through, whoops, that's not what I wanted to do. I was kind of thinking that we would come down through this pivot, then rally up through this pivot, and then ultimately make our low. But I don't think that's what's going to happen here. I think what actually, because this rally's too far too fast. So what I think actually has to happen here, and of course, no idea. I'm just talking out my ass here. But you can sort of see AB, and if we just clone that, whoops, clone, CD, you can see how we're, looks to me like the market's reaching up here, and also this big old honking gap right up here. That's probably our ultimate objective here in the short term. And if I'm not mistaken, we're starting to get up into reload zones up here. So if we go fibs, 61.8. Let's see if anybody's paying attention over there on YouTube. Jamie, you're not allowed to answer this. Joshua, you're not allowed to answer this. What do we affectionately on the TRI say call the 61.8 fib? Woo-hoo, there he is. Anyone? No one? Anyway. Meow. Well, actually, technically, you're right, eh? It's more meow than it is Mountain Man. Very good. Band-Aids. Very good. Andrew. Good. All right. And, half of the reason why I give these... look at all those fun answers. Good. You guys are learning this shit. Good. Why do I call it Mountain Man? Well, because one of the best crude traders I ever met, the guy just used to hit these fucking levels religiously. Just bang, bang, hit it, hit it, hit it. Random says Mountain Man / woman / ZE. What is ZE, I wonder? Do I dare ask? As Shane would say, maybe that's the people who identify themselves as a houseplant. Right, Shane? Anyway, so, I could see stock market work its way up, fill in this gap, Mountain Man level, AB equals CDs. This also is a head and shoulders pattern, which also projects up top there. And what I don't like is how fast this is happening. It's coming in too fast. To me, what that means, again, I'm just talking out my butt, is we know that there's going to be a pivot in here. What I'm worried about, what I was hoping, was that it was going to just do a nice slow incline up into here and then roll over. But I don't think that's what's in our store, guys. And what ends up happening is I'm hearing a lot of people now in the media, or, sort of financial press, if you will, saying that historically what usually happens in these scenarios is we come down and we make a low. And what they're worried about is this low is actually going to be lower than this low. If this low is lower than this low, but momentum is not, what does that imply? Divergence. And so that's kind of what I'm thinking. We go back to the Bitcoin story. Where was I going with all this? If we rally up here into that pre-halvening, I'd love it nothing more. And of course, some people on social media really busted my chops over this. But I would love it nothing more than if we could get this nice little rally through that pre-halvening all the way back up to this channel line here. But I'm not holding my breath. What I'm seeing here is we're kind of running out of time here. And we also seem to be running out of sort of oomph. So, like I said a moment ago, this little chaos crazy level came in here, and it projected, hey, maybe we can get a rally back up top here. There is that sort of pre-halvening window. We know that the halvening is coming up here. I got a sneaky suspicion that we're going to rally up into this area. Remember, there's Colin's buddies. There's Mountain Man. You all know him. He's just sitting there licking his chops. I'm thinking that pre-halvening rally sort of exhausts as we come back up against this trend line here. Kind of sucks. I was really hoping that we could just get absolute insano face rip rallies and just really rip the cover off the ball, but this is looking like it's running out of steam, and we're running out of time too. And then, of course, back to our conversation. What do bottoms in Bitcoin historically like to look like? The interesting thing is I even did this way back here. I think was our last sort of real discernible bottom before the nutso face rip rally. And you can even see it here too. So just out of curiosity, who can tell me what happened on this crazy ass bar right here? Let's see if YouTubers are Bitcoin historical event trivia buffs. What happened this date here? It's March 10th, 2017. Indecision. Not quite, actually. It'd have to have like almost a perfect doji. Oh, really? Nobody has this answer? Apache helicopters. Oh yeah! I remember people identify themselves as an Apache. Yeah, I remember. That's good. Yeah, well, this was the first rejection by the SEC. Hey, Dunjay! Nice to see you, buddy. Where are you? Still in town? I'd love to hook up with you again. Alright, so this was the big SEC fuck you. But notice what happened here. Market puts in a lower low. RSI does not. So this was sort of like, oh, we're going to get ETF. Oh, shit, no. Alright, and we had to sort of let the air out of the bag. Let everything come down. The fascinating thing is, check this out. If you believe in these crazy reload zone concepts, then really this was a buying window. So, point of the matter here is divergence comes in and woohoo! Away we go. So, really what I'd like to see, you see a couple of the examples of what divergence and what price does following divergence come in. I'm not going to say this is easy. How the fuck do you trade this? Right? Really, our rule is we want to let the divergence come in and then get a nice market structure on the other side to actually help us frame the trade. You called that Batman. All right. Good job, CMW. Anyway, point of the matter here was a good example of a divergence and then a nice W that you could have framed a nice little trade off of that W and played that move up. So have I got that kind of action here now? Not really. The good part about it here is we don't actually have a bearish divergence in RSI just yet, so I don't think we've actually gotten ready to fail here. It's interesting how this move here corresponds with which bar? That bar right there. And we actually did move higher here, and that was through February. A little bit, you can see the M start to develop on the RSI indicator. Uh-oh, be careful. Also, too, as Josh points out, this is a V top. So, good point there, Josh. You can see the very well-defined M up here. Also, too, you notice I draw just a very, very simple trend line, just playing connect the dots, boom, boom. And that sort of suggests that, well, real resistance is probably up here. You could probably do a couple of little trend lines here, try to identify, like, the only problem I have with people who draw trend lines is it's really important to understand what validates the trend line. That's this idea of market structure. So, be careful with your trend lines. Some are potential, some are confirmed. But, there's just even a couple resistance lines. This, I think, was an AB equals CD, so actually that's not a trend line. But if we go like so, pretty simple to do, right? So up, down, up, confirmed, right? Up, down, up, confirmed. So both of these, I wouldn't have a problem if people drew a trend line there. Even here, up, down, no new high, confirm. So you could actually make the argument there's a little bit of an M right there you could draw one off of. Interesting too. Tag, tag, tag. That looks like a pretty important line. So let's zoom out. Let's see where that takes us. All right, so again, there is good old Mountain Man. There is that trend line. And also, too, this is kind of a fun illustration for you. I think I did this in recent videos, but what the hell, we'll do it for you here on the fly. If we go, this looks like a bottom. So what's like a 127 extension? 1.272 is one of our fun little Fibonacci extension levels. That's pretty important. So you can see how we created this range, and if we broke out through the top of the range, there's 127. Looks to me like that was a pretty respected level, so then we could do it again. So we now have, this is where it gets a little bit tough, but I think we can actually go, well, I don't really mind going there to there. All right, so, yeah, so actually, I don't think we do, well, here, let's pull it up here. No sense in bullshitting. So 127s, what we want to see is the first dead cat bounce. We're going to do a 127 off of that, and you should see bang hit. And we're going to do another 127 off of the second one, and that becomes the third drive of the 3 drives pattern. I don't know whether you can see this or not. It's pretty zoomed out. Here we are. So 127 off of the bottom, and then another 127 off of this second point, and this becomes 1, 2, 3, 3 drives pattern. This becomes a very, very dangerous level here, right? For if you're long. Bears, they're actually going to be hunting short setups in there. So back to our chart. Actually, and I've already redrawn it. Well, I won't even draw it. So 127, that's the first one. Then the second one, 127, will take us up into here. And lo and behold, that's Mountain Man. And that's that trend line that we just drew off that other chart. And you know, the message that I've been giving over the past, I think maybe week or so, is basically exactly the same thing I've been saying here. So your first push off of this range, there's one. So 1, 2, then your second push up to 127, 78, 74, and 78, 50 we'll call it, or 78, 75, beg your pardon. Mountain Man sitting there, 79.56. I still think this is a very doable level up here. And of course, like we said earlier, there's good old Colin's buddies. We'll know that this thing's ready to crap out if we start seeing divergences. Can everybody see this div right up here? Notice how price was working its way higher. RSI actually topped out on this bar here, and we actually started to create divergence. And the cool part about it is, you know, like I don't think it's a good idea to trade a divergence signal. That gets pretty dangerous. But I do like the idea that once the divergence has actually been confirmed, which in this case is basically a move through there, so on that point right there, you can actually now start going, okay, at this point here, I can start hunting bearish market structure. So, really, you know, everybody should look at this and go, gee whiz, there's a whole bunch of M's up there, and down we go. And actually, I think I even took that trade and took profits at the 50% level there. This is a cute little trade. So the point of the matter here is if we can blast off through these highs here and actually come up and tag 61 and 127, complete the 3 drives, complete Mountain Man, he gets his fills, and this comes in on a div, oh boy. that would probably be a pretty powerful signal. And like we said, we know halvening's coming up here beginning of May. I think it's about, is it still the 13th? Can anybody confirm that? I don't mind the idea of the market working its way higher here over the next week or so into that sort of window that I'm thinking there. Hope that helps. I don't know. What do you think, guys? People in the lounge? Did that help you at all? Hope so. What's alt index still looking more interesting week by week? Oh, thank you, Sharky. Happy Easter, TRI. Thankful to have this community on my journey. I tell you, this May 13th, that's when the happening is coming. All right. I tell you, our community, I actually look forward to getting up and seeing these people on a daily basis. They're just such great people, man. Just Sharky, I don't know whether you're listening to me at 4.669 speed. Let's see. If you are, I guess I'm going to have to slow this down. Shark Toshi Nakamagawan, you are one really cool guy. Thank you for being in my life. I'm such a weirdo. I'm sure everybody on YouTube's going, what the fuck is he doing now? You're awesome, Sharky. You are so awesome. All of you people. Hugs and kisses. You're the bestest. Okay, I've been blabbing away here for about an hour and a half here. Does anybody want me to actually, I think actually somebody asked a cool question above that I didn't quite get. Somebody had asked, can you just, this will probably be sort of like Q&A, so if you don't want to listen to the rhetoric, then, maybe hop off for now on that. Geo says here, I remember finding out about the Rothschilds and the Napoleonic Wars 20 years ago. Wasn't that incredible? Those cocksuckers. And so typical capitalist, right? Totally played the market. And Andy, there's a cool book that Shane told me about. I can't remember what the name of it is, but it's about the meeting at Jekyll Island and how when they sort of conned the American public into buying the central bank idea, they even explicitly said we have to be really, really, really careful the public doesn't find out what we're trying to do here. And ironically enough, the politicians did find out what they were trying to do because the guy who was trying to pass the legislation, he demanded to have his name on it. And that was sort of the tip-off to the other people that this is all just to help the banks. And then they used to call them the trusts. Ironically enough, they were able to pound it through, and really they did it really nefariously too. Like really, really, terrible. Like in that video, the guy even the opposition guy in the legislature is going, we're selling our souls here by passing this legislation, and they're doing it on like Christmas Eve in a shortened session where all the congressmen and senators and stuff are away home on vacation. And we were explicitly told that there was going to be no major legislation passed while we're going on our break. And then the motherfucking sons of bitches rammed this thing through, like literally in the 11th hour before Christmas Eve or something like that. I mean, if you actually looked at the history of this is actually criminal what they did. But like I said, we're a couple nobodies. At least I am. I know you guys are smart. But you're a couple. I'm just a nobody here, and of course the bankers, they just laugh at us, right? Buy Bitcoin, and then maybe buy your machete and your AK-47 because I have a feeling those banksters are going to come for our Bitcoins one of these days. But that's another conversation altogether. Oh, all of a sudden the channel just died. Oops. Yeah, that's a good question, Zocknix. That's a really good question. So I used to Philby. I am not exactly sure what his real name is, but he put out a chart, and I just don't know where the frick I put it. On the logarithmic growth rate of Bitcoin, and I also did one side by side with that Benjamin Cohen. I think that's his name, Benjamin Cohen, because he also did a 4-year logarithmic chart, or 5 years, or something along those lines. And his study actually didn't quite correspond with Philby's study. But it would be curious just to go back and check those studies out and see if they're still working. Question is, where on earth would I have put that? BTC parabolic growth. This might be it. Let's see what we got here. Yay! Look at that. First try. Woohoo! That's not bad. All right. So now the question is, whose chart is which? I think this is Philby's chart, but I can't remember exactly off the top of my head. I think this was his. So you can actually see, and I seem to remember that a few months ago we had sort of said, wow, what a awesome timing a trade that was. And then they went and dumped through the bottom of this. Boo, hiss, boo. I don't think it's really in your best interest to try and use a chart like this to try and time your purchases. This is more of just sort of like, what's the big picture kind of thinking. Because you notice that, way back here we had lost this. At some point you could have said, well, this study's no good. Look at, we're below here. And then I think it also did that here also briefly. So really the big question I would have, and let's see if anybody can answer this on YouTube. Uh-oh, it's quiz time again. That son of a bitch, man. He always makes me work when I am watching these. They're supposed to be free edutainment, and yet the son of a bitch gets me to work. So, about cough. Uh-oh. What does that mean, Andre? Andre, random IMO when they come from my 0.0012 PTC. Oh, okay. That's a smart strategy. All right, so what do we call this 2-bar pattern? This bar and then this bar. Anyone? Wow, nobody. Interesting. Yeah, sometimes I think I'm not a very good teacher. Oh, there you go, Andre. Nice job. No, railroad tracks. Not even close there. Oh boy, what do we got here? Something coming up trying. Yeah, so days earlier. That's fine for you, I think. Okay. All right, cool. Sorry, everybody. Got to make sure that my business partners are knowing what the hell I'm doing here. Okay, inside bar! Yeah, that's right. Oh, no, I can't say pregnant. Look at, this would really suck if mom went to the hospital and baby's feet were sticking outside of her yaya. That would not be pretty. So, in fact, actually, isn't the head supposed to come out first? So, actually, that would be really, really bad. So, yeah, we got to watch out for those samurais. So, be damn careful, Mr. SP500. I don't know where the closet behind you. Usually those samurais are sitting in there waiting to chop your head off. We could call this an inside bar. So, that's good. Congratulations to everybody who mentioned that. It's not really the best signal here. And, of course, Ahmed, remember what we said about haramis. Is there anything about this candle that it looks a little bit suspicious? When I circle a specific part of this candle, probably ought to pay attention. So this is a very, very big tail. Excellent. Good job there, Josh. You can see how this candle put in a huge wick, and of course we came along, nom, 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 nom. And then a big wick and came along, nom, 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 nom. So I might argue, if you're looking at this trading range, I would say, really simply put, this is now the top of our trading range, and this is now the bottom end of our trading range. Interesting how this pattern here, notice how the top end of our trading range, wicks and tails like to be eaten. Notice how that's basically just going to take us right along that curve again, eh? So in a weird sort of way, it almost looks like this curve now, what once was support, now is resistance. Uh-oh. Now, like I said, this is an inside bar. So if we're really lucky, I'd say if, because to be honest with you, looking at this, I think the odds are pretty damn low. But if we're lucky, we finish the month out here. Beep, it's the end of April. And then we tick up through this high. That becomes a short-term buy signal. And my hunch is it's probably going to set up some sort of trade that's going to come up and try and eat this wick up top here. So, looking at that log study, I'll tell you, it's not enough to fill me with a lot of enthusiasm. And she's got some work to do to get back above this level here. No doubt about it. But as I've said before, I don't really think this is a good idea to use the kind of chart like this to time your purchases. That's kind of dangerous. Having said that, if we look back, 2 or 3 years from now, and we see mysteriously we've gone and recaptured this and we're working our way back up, that to me seems completely realistic too. In fact, we should probably squiggly line theory. Actually, it's cool how I ad-libbed that. My hunch is it's probably going to look something exactly like that. And notice right into the beginning of 2021. Once we get beyond that, then I think we can start rocking and rolling again. But this is a nasty, nasty year, folks. And the sad part about it, right? Think the 1%, the people who run the show, we have to know where they're long from. And I mean, the simple, brutal reality, and they've told us, they are required to disclose publicly. A lot of people don't pay attention. They don't listen. They don't respect. But they did report publicly that they went and bought a big part of this GBTC down here. Could they have been doing other activities through? Sure. But I do like this as a very, like I started the video off today, as a really great illustration of na-na-na-na-na-nas, institutional fingerprint, and what does an institutional fingerprint kind of player look like? Well, it often looks like a Rothschild. So that's sort of what I'm seeing here. So just to sort of finish that thought, a little bit concerning about Philby's levels here. This looks a little dangerous. I think this is your trading range. Wicks and tails like to be eaten. I don't see any reason why we can't. And then, wicks and tails like to be eaten. You can see that tail there has been unaddressed for quite a while. But I do like the idea that if we can sneak our way in around where those Rothschilds are in. And, the irony of it all is, the Rothschilds bought their stake in the Bank of England for X amount of dollars, whatever. I mean, all of the central banks around Europe and I guess North America. Even if you yourself, as the public, were allowed to invest and you paid, 5 times the price that the Rothschilds paid for an asset, do you think you're still going to be able to make money over the long term? I think so. If you pay, because keep in mind, they want 100x on their investment. So if you pay 100x or even 10x times what they've paid, you're probably overpaying. If you can buy at 50% premium to what they paid, man, that's basically being long an asset where the institutions are long. The problem right now, it's $7,100. That's a bit far away. So there's your log. That's to answer your question. Whoever asked about the logarithmic chart, I can't remember who it was. Let's see. And I don't know. We're getting kind of long in the tooth here, guys. Should I wind this up, or do you want me to keep going and scroll through the questions? I don't mind going either way. I just don't want people to feel as though I'm just blobbing on meaninglessly and endlessly. I don't think that they will tell us. Of course not. Min Duck Vu says, will the Rothschilds polite enough to tell us when the next bull market in crypto starts? I can absolutely say you unequivocally no. That solves that problem. But at the same time, too, if we know where they're long, is it in our best interest to be long from their same levels? Can a fundamental analyst or fundamental investor sit on an asset that they perceive undervalued and just simply ride out the storm until the market starts actually perceiving that there's value and then bidding the price up again? The answer is yes. So I don't necessarily think we're going to use the Rothschilds to tell us when to buy Bitcoin, but definitely their activity in the market is very valuable information for us. And where they're long from, that's hugely valuable. And I can absolutely tell you, Ming Duck Vu, if this was 100, 200 years ago, there's no fucking way in hell they would tell us. The only reason why they told us was because they were forced to. If EOS is broken, does the crypto take off? Because that should be mechanical, right? Yeah, Stan DP. I had kind of made the argument, and I like the idea that you could technically consider Bitcoin as sort of our modern day sort of tally stick solution. The tally sticks were brought in to try and curb the silver trade and the silver business. As a and the gold standard as trying to freeze the banksters out by creating a hard currency. This is what you value your assets by. And oh, by the way, and it was in England, Henry said the only way you can pay your taxes is in the form of these tally sticks. So in essence, boom, that made them currency. Please compare gold and tally stick BTC. And is that what we're going to call it now? Gold and tally stick BTC. And you think about it, the tally stick was in essence, you had very specific notches that denoted certain denominations, so it wasn't fungible. And the two parties had their own keys. What a coincidence. I'm telling you, man, the more and more I see, look at Bitcoin, the more and more I see tally sticks. It's fascinating. The only question here ultimately is, do the banksters actually perceive Bitcoin as a threat? And since they own the politicians, do they actually start coming after Bitcoin and trying to destroy it? I don't know what the answer to that is right now. I honestly don't know. That's the $64,000 question, isn't it? And my stomach just grumbled there. That's interesting. Good timing. Okay. Okay, what do you guys hear? Okay, yeah, I wanted to finish off that. So if we go back to Benjamin's look at this now, it's a little bit different perspective. This is, in essence, the way I think Benjamin looks. Oh, thanks, Homer. This is the way Benjamin sort of looks. Oh, come on, you. At this story, and of course, I'm totally ad-libbing. I have no idea if this is even accurate or not, but I tried as hard as I could to replicate his study. And it's interesting how actually here, there's actually no problems. So, I don't know. If you're a Benjamin fan, it'd be interesting. Maybe somebody at TRI, see if you can find a recent comment from him. I know he likes to go on about how Bitcoin's not a 4-year cycle. Don't call it a 4-year cycle. I do actually like Benjamin's kind of thinking that each of these cycles should be sort of less in degree. Of course, as price moves higher, you won't see as big of a punch as time goes by and these waves go by, but of course the raw dollar amounts are going to be pretty high. And interestingly enough, and we've sort of talked about this on the site quite a bit recently, it's the M2 money supply is growing at a parabolic rate, which is interesting because that's an interesting conversation about like Rothschilds and stuff like that. I don't think the banksters actually were expecting. I think the banksters were expecting this to go on into the end of the year, as I sort of talked about, and get Trump reelected, and the con can keep going on. I showed you guys back in January. Make no mistake about it, Wall Street did extremely well. The 1% got ridiculously wealthy and got paid like billions, if not trillions of dollars there in January. And I find it fascinating that nobody, not a single fucking person I have seen across any social media, any major news networks, anywhere has made any reference to this. And it's shocking to me how much money changed hands there in January. And I was the only person that saw this happen. This is, sometimes I feel like, man, I must be crazy. I can't believe nobody else in the market saw this. And then mysteriously, all of a sudden, market collapses. I find it fascinating that somebody go and look and tell me if the company Boeing, have you ever heard of the company called Boeing? It's kind of a big company. You would think that it would be worth something. Boeing? It's a pretty big company, isn't it? Somebody go and find and tell me what the book value per share of one share of Boeing company is right now. I honestly couldn't believe it when I saw that. It makes no sense what the fuck these people are doing to our society. It's like the baby boomers are cashing out as much and as hard as they possibly can. And I don't get it. Why? Why is this happening? Well, it's an old shitcoin that happens to make a missile that just so happens to have your street address punched into the computer right now, Joshua. So be damn careful what you say. I mean, I just don't get it. The capitalists have literally, like I said, I just felt that little damn crosshair thing on my forehead again. I better close the fucking curtains. Goddamn. And here in Canada, they're CSIS, right? And they're very, have you guys ever heard of CSIS? I bet you nobody's ever heard of CSIS over there on YouTube. And they're super, super sneaky. All right, so anyway, finishing off that question about logarithmic growth rates. Interesting how Philby's study is in a bit of trouble here right now, but Benjamin's is sort of hanging in there. So I don't know. I mean, there's not really a whole hell lot more I can add to that question, but who was the person who asked that question? Did that help you? Everybody said Mountain Man, so that's good. I don't know who asked that question, but hopefully. I know, it's ridiculous! Thank you, B2, for doing the research. They have completely gutted the company. The company is worthless. And I'm like, what the fuck? This is supposed to be an institution of the United States of America. Right? And the company is worthless. They have literally gutted the company from the inside out. And I don't understand why. How the hell did this happen? Shocking, really. And there's no reason for it. The only reason why it happened was they just took all the money that they borrowed to buy back stock to bid the price up so the executives could exercise their stock options and get paid, millions and millions and millions of dollars. It's like literally there's like a purpose. They are trying to gut the economy. That's baffling. Buy Bitcoin. Okay, so hopefully I answered that question. I didn't see any feedback. Random last. How long do you think the deflation part will happen until inflation starts picking up, and what order for major sectors? Yeah, well, that's a 60. That's a pretty damn big question, eh, Random? What I did find fascinating about this cycle, hey, take it easy, Josh. I mean, I'm just blabbing away here. How long have I been talking? A couple hours? All right. Hey, look at that. I already got a downvote. Somebody, I must have just said something. I wonder what I just said that somebody went, fuck you, Brian. I'm curious. What the hell did I just say to make them go, fuck you? Baffling. Never understand this silly social media. Makes no sense to me. Ishmael, is that you who asked that question? Anyway, somebody just gave me a thumbs down. Thank you very much. Love you. Please compare. Oh yeah, let's. You know what I wanted to do, which was kind of fun, is what I wanted to do was look at our gold chart setups. Because this has been my sort of thinking all along here. Was keep in mind this study here is not a study about which asset is better or worse than the other. This study is nothing more than just simply asking what's the market's preference right now. So this is a study measuring the numerator here for the chart on the left is gold and the denominator is Dow. So in essence what this is saying is, if gold's like $1,000 an ounce, or 2,000, doesn't really matter. I mean 2,000, right? And the Dow's 20,000, let's say. Then what that's really saying is it takes 10 gold units to buy one Dow Jones Industrial Average unit. So in essence, that's what this relationship is. How many ounces of gold does it take to buy one Dow Jones Industrial Index unit? And think of this as sort of like, okay, I got a choice. I can take my money and I can buy gold. Or I could take my money and I could go buy this paper asset that theoretically is a proxy on its earnings stream. So in essence, gold sits there and says, I'm a lump of gold, look how pretty I am. There is no earnings stream. Maybe you can lend it out to other people and collect interest, but we all know what short-term interest rates are, so you're not really going to make much there. Some people will eat it. That's a whole other conversation altogether. But to all intents and purposes, a chunk of gold just sits there and says, I'm a chunk of gold. Here I am. It is interesting how the that banking video said, don't be conned by the banksters into thinking that if we go on the gold standard, that will actually solve our problems. Not only the fact that he believes that Fort Knox is empty and the United States has no gold at all, and actually they've gone out of their way to make it damn sure nobody can audit the Fort Knox. But that's another conversation also, completely out of different conversation. But this is just simply asking what is sort of the market's preference. Is the market's preference towards hard assets, or is the market's preference towards soft assets, paper assets? So, this was the previous cycle. This was, in essence, when the commodities markets really got going as tradable instruments in the United States of America, when the futures and options markets really got hot and jazzed. This was when the baby boomers were going through their transition of taking over the economy, and the greatest generation was leaving the economy. This part of the cycle is what I like to call the fear apex, where the propensity to own hard assets is very high because nobody has any faith in the government, nobody has any faith in paper currency, and we just want to own hard assets because the economy is not going to grow anymore. Conversely, through huge economic growth periods, this was the dot-com boom, the baby boomers were just coming into the workforce here. or the previous generation, the greatest generation, was leaving the workforce. Here, the baby boomers are at their absolute peak earnings years, and the greatest generation, they're on their deathbed. They're not even a part of the economy anymore. Now, interesting disconnect, right? This, theoretically, we should have gone up into an apex peak somewhere around 2017, 2018, as we come into the end of this generational swing. But you can see gold just didn't perform here. Why? Well, I would make the argument something else came along and ate gold's lunch. And if we look at this relationship now, you can actually see very clearly the generational pivots. This is the baby boomers taking over their generation, the greatest generation, retiring. And then now this is the baby boomers retiring and the millennials taking over their society. And I actually find it quite remarkable how almost identical these cycle relationship. Like, remember, this is a ratio of just simply how many hard asset units does it cost to buy one paper asset unit. It has nothing to do with, oh, is this better than that, or is that better than this? Nothing to do with any of that. This is just simply what's the market's sort of appetite for different types of assets. Interestingly enough, you can clearly see, and they're all the gold bugs, they're all pissed off right now, but you can clearly see we're not really breaking to new highs, and ironically enough, for gold to actually even get back to the stage that it was back in 1980, gold would have to go absolutely apeshit, right? With the Dow right now, where are we, like 20,000 for it to get back to 1-to-1? It would mean gold has to run up to 20 Gs. Is that realistic given the amount of appetite in the marketplace for digital gold assets? I don't know, and frankly, I don't think it is realistic for the gold bugs to think that. Could? I mean, you see how far we're sitting right now at the relationship, and this is a relationship here. This is Bitcoin and gold. You can see wicks and tails like to be eaten. That's a pretty damn big wick. We also got some pretty big wicks up here. We got some pretty big tails. And then, of course, when this cycle sort of settles down, I actually fully expect us to come right back down to the bottom here. But remember, this is not saying that Bitcoin's going to zero. This is just simply a relationship between paper assets and hard assets. So what that does say to me is that once we get beyond coronavirus concerns, my hunch is there will be vaccines down the road. Ironically enough, I joke with the crypto community. I wouldn't be surprised if Bill Gates is actually going to connect vaccines, your sort of pass to participate in society, and the blockchain all together. I really do think. Back in 2013-14, when I first got into this space, I said explicitly, I would not be surprised by the end of all this, sort of like 50, 100 years from now, every single human being on the planet will be on the blockchain in one form or another. Permanent record, everything you've done for your entire life. And you better be damn careful when you're 3 years old and you're thinking about pulling that puppy's tail, because it's going to be on the blockchain. And maybe 30, 40, 50 years later, you're going to be called to task on the fact that you pulled that puppy's tail and made the puppy cry. So, I mean, you got to feel sad for the gold bugs. They kind of got left behind here. I do think that gold could play around here. I wouldn't even be surprised, to be honest with you, by the end of this that we see gold, $5, $6, $7, $8, $9,000 an ounce. That really wouldn't surprise me one bit. But do we see gold break out these old cycle peaks? I don't think so. I think, put together with crypto, we've actually got a really, really wide playground right now. You could see these markets all over the place. And 2019 is going to be, 2020 is going to be a really fucking screwy year. So get ready. So, who asked about that question? Andrew, didn't you ask that question? Andrew Middleton, I think he was the one who asked about this. Please compare gold and tally stick BTC. So, Andrew, I hope that helps you. A central bank could manipulate the gold points using so-called gold devices in order to increase or decrease the profitability of exporting gold and therefore the flow of gold. Yeah, I suppose so, B2. I mean, there's, what I find really sad is there was a loophole that actually allowed, again, going back to this gentleman's video that I was touting there earlier on, talking about how Americans themselves were not allowed to buy gold, but foreigners were actually allowed to buy the gold out of the U.S. Fort Knox at the fixing price, which is shocking, right? And I think that the foreigners just kept buying up the gold at like $30 an ounce. I mean, just ridiculous. And until they just depleted the entire Fort Knox. All gone. And it's gone. So, I have heard, and I think Da Vinci and all his crew, I think we had one of Da Vinci's buddies is in the, I think he's in the level 3 program. And I had put the challenge out to him to keep an eye on the commitments of traders reports. Maybe he's in the level 2 program, I can't remember. Because I know he and Dav like to do a nice little video and look at charts and stuff like that. So if you are a real big gold and silver bug, I would keep a real close eye on those COT reports. And, long and short of it here, the commercials are not going to get caught flat-footed, right? They're in the business of, oh, God, there's my crazy little REIT that I bought. Actually, I probably should buy some more of it, but not just yet. We'll get on to that some other day. So if we look at the gold market, for example, I really like to follow the commitments of traders. Excuse me. Right, so what do we see here? Interestingly enough, from this camp, we can clearly see there was a massive reset in the gold market back here in September, October 2018. And I even remember Dav, if I'm not mistaken, I seem to remember Dav was on the site. We even explicitly talked about this. So anybody who's a gold bug, this is the kind of shit that you really should be following. So you can see the commercials, they actually started to go short. And if everybody understands commercials' motivations, they're always taking the opposite side of the trade. It's what they do. If they get paid to do this. And then the institutions, they facilitate that trade. So the institutions, they have no choice but to make money. What a convenient relationship, eh? So you can see where the gold buy signal is. And of course, anybody who follows M's and W's, right? If we look at this chart, and of course, gee whiz, what do you think? Where do you think I'm going with this when I reach for my fib tool and I start picking a high? What do you think I'm doing here, folks? You should know what's going to happen next. All right, and then we grab a reload zone. And bingo. So the issue that I would have here is if we're following the smart money, and remember the commercials, they get paid a lot of money to be right. We can clearly see where you were supposed to be buyers of gold. That's about what, $1,100-$1,200. Some students now are even like, you know what, I'm not going to use momentum indicators. I'm not going to use volume indicators. I'm going to use COT data to actually, as my indicator reason to consider taking a trade. That's kind of cool, eh? So anyway, location. First reason for a trade, location, location, location. Second reason for a trade, in this particular case, I'm going to use COT reports. And I see the transition going on. This is what we call the reset, where everybody's like, well, I'm not quite sure what the trend's going to be. So let's all square up our positions, and then we'll go with whatever the economic data is. In comes W's, in comes M's in commercials, in comes W's on large institutions. All right, I think we got our signal. And away we go. Woohoo! But now look at what's going on. Something's not right here. Now we seem to have this is what I would actually call an extreme reading. All right, this was the reset, and you can see extreme readings when the large institutions are loaded up on the long side. Are they likely to buy much more? Probably not. Commercials are loaded up on the short side. And if they even get the slightest wind that, hey, maybe this bull market is unwinding, we better fucking start taking those hedges off. So you can see the structural signal that came out of these camps. And, of course, that led to what one might argue was basically the end of the bull and the start of this sideways. Everything's reset. New structure signals come in. Away we go. So the question now is, and the cool part about this is all you sort of technical analysis aficionados, are we allowed to buy up markets? Is that kind of breaking the rules if we're professional traders? What happens if you work on an institutional trading desk and your manager comes by and sees you buying an up market? Anyone? Does anybody know? What happens? Nobody? How about in the... Oh, look at that. There's only a few people in the hangout. Hey, I'm outlasting all of you. I will keep recording and talking until there's no one here. Where's Rob? Ruff, meow. Are you here, Rob? Probably not. You're gone, eh? I outlasted you. Fired. Hey, you got it. If you are working on an institutional order desk and you buy an up market, holy moly, you're going to get your ass kicked. So the point of the matter here is we're actually starting to get anecdotal information that the commercials are at extremes, the institutions are at extremes, and they're actually unwinding positions here. Now, remember we said this. If you want to sell in size, remember we started the video off with this. If you want to sell in size, what do you actually do? If you want to sell in size, what do you actually do? Remember that Rothschild reference I said here. Remember? Think Napoleonic War, Battle of Waterloo. Took over basically the British government. One guy. I own all your asses. No? Of course, all the yeah, very good bit too. So, I'd be careful here in thinking, who's actually buying this rally. I definitely know the institutions are not buying. If we think things like, who can remember, what did we used to say about, remember we used to have a fun story about Amanda. Let's see if anybody on YouTube even remembers Amanda. Where's Amanda from? I don't know whether any of you even in the lounge remember. Amanda? Where's Amanda from? Amanda. Remember, she used to have a cool place we used to hang out? Hey, very good, Nick. Nick, you've been around a bit. Good. Good answer, Nick. Yeah. Oh, she can? Oh, did they actually fire her? God. She's from Missouri. Anyway, remember we used to joke about Amanda's penthouse. That was good old days of crypto rallies. But if you actually look at the gold price right here, I think you can sort of see what's going on here, right? If we think about things like parking garages, usually what markets like to do is establish a range and then just simply replicate the range to the upside. So what happens if we do a parking garage here? Extensions, boom, there's 200%. 1706. What a coincidence. What was this high? That high was 1704.30. So basically they went right up to the top of the parking garage, the penthouse, right? 200% extension, and had to clean it up. Interesting to see that we've broken out through the top. You know, we have to understand, based on the COT reports, institutions are not really participating in this rally. Be careful here. And then finally we have to ask ourselves, well, what's kind of going on in the big picture? You can see what we're doing now is we're actually coming up into, what did I call these kind of levels? Was she the FA lady? I don't know whether... The problem with Dash is what the fuck is fundamental value on Dash, right? So, I mean, it's all a Ponzi. They're only worth as much as the next guy's willing to pay for them, right? Does Dash have a limited supply? Is it a POW coin or is it POS? I can't remember. And of course, too, remember Dash was like one of the anonymous coins originally, right? It was supposed to be all cloak and daggers. Anyway. Okay, so point of the matter here is if we look at this range, where do you think I'm going with this? I just did this on the downside. What do you think the odds are we're coming into reload short zones? Survey says, bang! 78.6 is 1734.70. And like we said earlier, oh boy, look at all these levels. Let's zoom in so we can get these levels nice and crisp here. Oh, look, there's even a price gap. Son of a gun. Okay, so let's, this is what we do in our level 2 program. It's called horizontal support and resistance. We're just going to trick out our chart. Boo-ba-da-boo-ba-da-boo. Hopefully you can see all these levels. Man, there are a ton of levels up here. So we got all those. Boo-ba-da-boo-ba-da-boo. And there's also this big price gap. Price gaps. Anybody, just out of curiosity, let's see if anybody on this YouTube page knows. What's the statistical probability that a gap's going to be filled in? All you OGers, you know this answer, so don't answer. Let's see if the new people... there's not that many people watching this video right now. Let's see if any of them can answer. Well, bigger. Keep going, Team Sam eBay. Random says 80 plus. Ismail! Nailed it. It's a pretty damn big number. So, no. Is anything in the market 100% Team Sam eBay? We used to always say, you want a guarantee? I'll show you 3%. And the irony of it all is somebody says 3% guaranteed return. I'll take that in a heartbeat. Nowadays, 3% guaranteed rate of return. I think I don't even know what the risk-free rate in the market is right now. It's got to be less than 0.25%. Anyway, the answer is 91.4. Somebody did a fun study on the internet recently. Well, not recently. It was a few years ago. And we love passing that article around the site. So point of the matter here is if you look at your gold chart, right, we've tricked out our charts. We've identified horizontal support and resistance. We've identified price gaps. So where is it likely that we're going to see a fight? Well, I think we got some pretty good levels here. This is what I would like to call like a traffic area. Clusters of highs and lows. Maybe we'll just go like And you can trick out your charts. I know a lot of professional futures traders that I used to work with. This is all they did, and they would just simply trade against horizontal support and resistance levels. So we rescale our charts, and let's see if that paints any kind of levels for us to be watching here. Oh, isn't that interesting? See how that works? Isn't that cool? Does it make sense why the market is getting sucked up into this level? Makes sense to me. In essence, for the currency traders, we actually say that a lot of the currency clearing firms that say something like Johnson & Johnson or AT&T or Microsoft, they have to move a lot of money around the world. They will actually fix levels and say, okay, Mr. Microsoft, we'll do a deal on a regular basis at this level. I wouldn't even be surprised if there are some currency clearing desks that were like, we've got to get some business done at these levels. Okay, how the hell do we get price up into these levels? I know, let's engineer a big, US dollar's going to zero, all that kind of talk. And of course the gold bugs, they absolutely love that stuff. So, point that I'm trying to make here is we're coming into levels. You know how much Brian loves his 78.6. So you can see how close that is. If we got, we're actually getting a little bit of divergence indicator here, guys. If you want to use COT reports as your indicator, fine. Excuse me. But we've got one reason, location. We got two reasons, indicator divergence. Give me a three reason. I don't know, maybe a nice big fat M. And I actually like the idea of building a short position. I like also the idea that the humans are panicking. The humans are freaking out. Spot markets, everybody's buying up any possible silver and gold coin you could possibly get your hands on. This is the end of this cycle. This is these big celestial event windows that are total uncertainty and chaos. So, can we get a nice little frothy blow off top here? I'm curious as to how we act in here. My hunch is down the road we are going to resolve this level higher and we will see new highs. And then, coming full circle, could we see the gold price maybe jump up into, maybe we do AB equals CDs, maybe come up against these old levels in here against the Dow kind of thing. That takes this relationship back up to eating wicks and tails up top. Yeah, that's totally doable. The irony for this relationship is actually, right now, I would say this is completely open ground. We can trade anywhere in this window over the next few years. This is a wide open turf. So is this a combination of Bitcoin and gold? Is this either gold and Bitcoin staying quiet? Is this Bitcoin going down and gold going up? I don't know. I mean, it could be a combination of any, but, you can see the playground. Look at the size of that tail. So you know that right down here, just in the short term, this relationship could be as wide as that, right? Wicks and tails like to be eaten on both sides. So that's basically our playground here. As I said, is this just gold? Is this gold and Bitcoin? Is this just Bitcoin? Is this gold going up, Bitcoin going down? I don't know. But I do think that gold here could do some outperformance here. So, be aware of that. All right, I've been blabbing away here for about 2 or 3 hours. I don't know. I think I'm probably long over talking my welcome here on social media. So why don't we leave it at that, guys? I'm going to go get ready for my crazy video conferencing visits with my son right now, which he completely doesn't understand. We all have our own personal nightmares, battles, obstacles that we have to deal with through our own lives, and especially through this incredibly tumultuous pandemic experience. Let's all just try and be positive. Let's try and just be the best humans we can be. Let's try and just be nice to each other. Is that possible? I would love if we could live in a world like that. Sadly, of course, Rothschild conversations. And it wouldn't be awfully nice if that family just came out and said, you know what? We're going to fund the world. Here is a $10 trillion emergency fund, which is probably just a fraction of their net worth. And we could set the stage for a whole new world order and people trying to help each other. I doubt it. Probably more Brian just pie in the sky kind of talk, but nonetheless, if I've made even the slightest bit of positive difference in all of yours lives, then I've done my job as just one little human. So PMA for the win. If you'd like some help setting yourself up to play this game and actually take advantage of these Rothschilds and use their information against them, that's basically what we do. We ideally want to turn you as a public participant into an institutional player. That means you're buying down markets and you're selling up markets. That means you're not borrowing and you're not overextending yourself when the economic cycle is getting old, because that's exactly what the Rothschilds just feed off of. And if you would like, you can disconnect from the system. Oh, what a beautiful statement, Butu. Yeah, thank you, Jojo, for helping me over the past few years. I appreciate that. That's actually that message. Jojo, seriously, I'm looking at her picture right now. Seriously, sweetie, I want to make you famous. You're on the other side right now, but I want to make you famous. I want people to go, fuck, man, watch these JoJo videos. I don't know what the guy's name is, but he's always talking about this JoJo. She must be awesome. So, yeah, I know. That's what it's called, the creature from Jekyll Island, yeah. Boo Hoo Hoo 007. You have to watch that video. You have to block off 3 or 4 hours of your time one of these days, and you have to sit down and force yourself to watch that from beginning to end. Great, great video. So, okay, guys, have yourselves a great day. PMA for the win. Hey, look at that. I got another downvote. What the hell did I just say there that generated a downvote? Fascinating. Oh, well. Whoever you are that is downvoting, maybe even just reach out to me and see if I can try and help you. I don't understand why you people are downvoting. There's certainly nothing that I've said here that's enough to justify people hating. I don't get it. Fascinating. I don't know. All right, guys. Take it easy, everybody. I think actually this chart right here, Team Sam eBay, you've never seen this before, have you? So I think I actually made a small difference in his life. So take it easy, everybody. Wish me luck with my son this afternoon. All the best. And bye for now.